Today, we have Dennis Gartman, editor and publisher of the Gartman Letter, Kudlow and Company contributor Jerry Bowyer of Benchmark Financial, CNBC contributor Andy Bush of BMO Capital Markets, and our Kudlow Bear, who lives in constant fear that someday the housing sector may recover. That is Gary Schilling. He is president of A. Gary Schilling and Company, a regular contributor to Forbes magazine. Gentlemen, welcome, everybody. Let me go to Jerry Bowyer. Jerry, first of all, our Kudlow caucus said it is still appropriate to buy stocks for the long run. And you hear a lot of comparisons after a lousy month of June, after a lousy second quarter. You hear comparisons with the 1930s, Jerry. You hear comparisons with the 1970s. But I would submit, even though we had a bad couple of months for stocks, it is not the 1930s. It is not really the 1970s. What's this all about, Jerry Bowyer?
Well, in my opinion, stocks are concerned about what next year is going to look like. If I'm an investor, which in fact I am, and I'm looking at next year, I'm asking two questions. One, who's going to be running the country? And two, will a dollar buy anything? What's the dollar going to be worth? Because that's how we've denominated these investments. And I think what you're seeing in the stock market now is concern about the political risk, the central bank risk. Will Ben Bernanke wake up from his stupor and kind of get on this and understand that he needs to be concerned about the value of the dollar? And are we going to get Obama and Nancy Pelosi and Harry Reid running this country? If we're going to get them, I don't think that destroys stocks for the long run, but it makes it harder. It's rapids. I mean, we're going to have to figure out a lot of way to work our way around the regulations and the taxes, and there'll be a period of disruption.
All right. Well, Andy Bush, let me just ask this. Regarding Jerry's important question, will the dollar buy anything? First of all, in our meeting of journalists today in the Oval with President Bush, he was very clear and emphatic about a strong dollar. Very clear, very emphatic. And Andy, I want to note, Secretary Paulson was out and about today talking about a strong dollar. And maybe we're all too pessimistic on the Fed. If you go back and look at the Fed statement, maybe it could have been a stronger statement. But they are turning in the direction of fighting inflation. And the Fed funds futures market, which we can put up on the full screen, Andy, is showing a couple of rate hikes later this year, I think beginning in September. Are we too bearish? I mean, the dollar, believe it or not, was up 1% in the second quarter, Andy Bush. Are we too bearish? Look, there's the Fed fund story. You've got two rate hikes, or they're taking back two rate cuts, one in September, one in December. Maybe that's enough to send a signal on the dollar, Andy.
Well, and I would add that Ben Bernanke specifically addressed the dollar, specifically mentioned the dollar in a speech right after the FOMC met. Of course, that was undercut by the ECB coming out, Claude Trichet, and saying they were going to raise rates. Trichet's comments are going to be followed up this week with the meeting on Thursday, so we'll find out what the ECB is going to be all about. But the dollar looks okay. I mean, it's not great right now because of the kind of pullback from when Bernanke came out, and you made mention of this and have been hammering on this for some time, Larry, is that they came out in support of the strong dollar. They came out and said they're going to be inflation fighters. And then all of a sudden, when the two-year note rate got above 3%, they all started getting kind of weenie-ish, and they backed away from it. And that's really where we're at right now. We need, a little bit of stronger voice to be consistent from the Fed.
But, maybe we don't need 4 rate hikes. I mean, maybe 1 rate hike would be a shot heard around the world. That's something to ponder here, just something. I mean, again, I heard President Bush today, he said, yes, he wants a strong dollar. And it just seems to me you've got a lot of people singing that tune. It's just that the markets don't believe it. And Dennis Gartman, here's one. Corn and wheat fell the limits today, okay? That's the big commodity story. Corn and wheat down the limits. And even oil, Dennis, let me raise this. Oil is hovering at 140, but hasn't oil been in a trading range? In other words, for all the headline stuff, we really haven't broken through on the next leg yet.
Well, no, you really haven't. You had a chance. It didn't carry through today. And I think, Larry, you're right. The big story today is the news from the USDA about how much larger the corn crop is going to be than most of Wall Street and LaSalle Street had been anticipating. So we took corn limit down, wheat in the middle of the harvest, a much bigger crop than we thought. Wheat went limit down. But before we get too excited, remember, soybeans closed very strongly on the upside today. So if you want to get carried away about the fact that there's a deflationary force taking place because wheat and corn prices fell, soybeans finished the day very strongly. Has crude oil broken out on the upside? Not really. But, Larry, anybody who's short of it doesn't feel all that good.
Well, I know. I think that's why the drilling business is so important. And the president was emphatic today. He is not giving up on drilling. In fact, he suggested, or he said he's thinking about a national address to the nation, a primetime address on drilling. Good. And in response to a question from somebody else in the group today, he said he may have to go to an executive order to stop the moratorium.